I'm going to record this session as ever, and we will post it later in the blog, and there'll be more people coming in as we get going. If you have any questions, stick them in the chat box as ever, and I will answer them as we go along or at the end. Morning, Ashley. You should be a panelist now. Right, I have the homepage for Mentor Pro up, and Ashley has posted an idea on gold. Ashley's been trading gold the last 6 months and doing very well at it when it's trending. And last Sunday, a couple of days ago, I posted about how this week could be crazy because of the upcoming news. And then Pierre has also posted, he's posted his Earth and Sky analysis, but he's also cautioning about the news this week. And of course, news is the catalyst, particularly when we are trading intraday, intra-week, that we have to pay attention all the time to news. And we have been getting a lot crazy overreactions, more so than ever it appears this year. And what folks keep forgetting is, remember, all red flag news relates to one of the three things that we talk about. And if you go into fundamentals and you have a scroll down and you have a look at these grids, growth, GDP, gross domestic product, the total amount of goods and services created by an economy, by a country. Interest rates, think of that as a dividend, is the way I explain it to folks. If the US was a company and it's paying 5.2% dividend and it's growing kind of, and it's kind of got its inflation under control. Again, these figures are a work of fiction from the governments, but hey ho, they all play the game. Then that is what all of this relates to. So if we're talking about inflation, that's straightforward. Inflation. Retail sales. If the amount of product being sold in the shops goes down, clearly that is bad for growth and GDP. And so retail sales, core retail sales, again, you've got CPI, so you've inflation. And then the biggie tomorrow, Fed funds rate. But it's not just the Fed funds rate tomorrow, it's the economic projections. I think it's 6 times a year they also do these. So this is what they're going to do tomorrow. And when they tell us, everybody's expecting at least a 0.25% cut. Initially, the cut was anticipated to be 5.5. So there is always the chance for a surprise. And then it will depend on what they say in here. So they could do one thing here that could send the price shooting up or down. And then they might say something completely different here. And the press statement may even conflict the other two things. And then finally, Powell's going to come on and do his little tap dance. And the bottom line is they cannot afford for the US economy to crash before the election in November. So by hook or by crook, they are going to do whatever is necessary to try to keep the markets up. And I said the other week, once the election's out of the way, it doesn't matter who wins, they will all blame Biden. So that will be the way that it will go. And in a way, quite probable a crash in November, December might not be a bad thing for markets in general to clear out some of the nonsense with some of the overinflated prices that we've got on stuff. GDP, again, that's growth on the Kiwi, so that's easy. Employment change, if more people are working, then clearly that encourages growth. It also encourages inflation a little. And unemployment rate, monetary policy statement then for the pound. So at the moment, they're not expecting them to change the rate, I don't think. No, they're expecting it to stay the same. These figures here are last time, and if you're never sure what anything means, click on here and it will tell you. But last time, the vote is reported in an XXX format. The first number is how many members voted to increase rates, so 0. And then the second number is how many voted to decrease rates, 2. So 2 said to cut last month, and 7 said to leave them as it was. Hence, the thinking now is that they're not going to do anything dramatic. Having said that, the Bank of England was so far behind the curve on the way up, and they appear to be behind the curve on the way back down again. Unemployment, etc., etc. And then you've got Japanese news, big news on Friday, their monetary policy statement. Then you've got the British retail sales, and then you've got core retail sales in Canada. So that's what all of this lot means. When we know that we have something as major as this coming out, it makes it very difficult when we're trading intraday. So what I was explaining on Sunday is how I will look at extreme points so that if price overreacts, I am working on the probability of where it is all going to stop. Now, from the bigger picture, if you step back from this and you're looking more in terms of investing and what to do with your money and how to use your skills that we teach you here at Mentor Pro to get into different asset classes, then you need to zoom out. And I have hosted a couple of recent sessions with you. The last two sessions I did a month ago, I talked about successful trading and investing is all about cycles. And this is about catching economic cycles. And if you haven't read it and haven't watched the video and read all the links, I urge you to do so, because that is 25, 30 years of me being in financial markets condensed into one article with a number of links off explaining why I got into gold when I did. And I also gave you links to things or crypto, etc. But I also gave you links to things that I was doing. So what I said in 2022, how I was buying gold and the thinking that was going on, because what we forget after the event is when we look after the event, it's also clear, oh, well, I bought here and I did this, wasn't I clever? But it's the emotion that was going on at the time and the thinking and the reasoning that is the important bit, because most people act like a herd within the markets, and price starts to pile up and everybody dives in, and then price starts to drop and everybody panics and gets out. And when everybody panics and gets out, that's the time when the smart money makes money. So that was what all of that was talking about. So I recommend that you go through that. You will find it if you go to Mentor Blogs, go to my investing analysis, and you can find the 5 most recent posts in here. And then you also can find going back years. So why I was talking about Bitcoin again in November last year, I started buying Bitcoin again in July. April, I was talking about what's coming next and how I thought it was livening up. So again, this was all how I felt at the time and why I started to get back involved again. So a history, a recent history, well, going back in here, going back 15 years of why I do what I do when I do it. And if you can learn to think against the herd, you give yourself a far better chance of being successful when everything else is going wrong. And then the last most recent session that we had was this one. And this one was talking about, so the first one was talking about market cycles in their own right, trying to catch gold or property or whatever you're looking at the right point. And then this the session last time was talking about the psychology of what goes on. And this was the thing I basically was focusing on, is how everybody focuses, because of the herd mentality, of what goes on through a rally and how it all crashes and it all goes nasty and back down again, and depression and panic and anger, etc. And then we start all over again. So what we try to do, the smart money, we are trying to catch it down here to ride the wave up, whatever the asset class. So once again, I urge you to watch that. So today, crypto. Again, if you want to understand how I felt in October 2020, so again, it's the emotion. It's the reasoning why I did what I did, but it's the emotion explaining how I felt at that time. And I explained in there why I believed that crypto could be the investment in your lifetime. And boy, did I get it right. But again, understand the reasoning from a fundamental perspective, but also understand how I felt and why I was willing to take a risk on such a volatile asset. And then going through all of that, you can see how it panned out and why I was taking profit when I was, and why I got out when I did. So this is a chart from Investopedia. It's not accurate, is this? But it gives you the right idea. It says here in June of 2020, I think that's what it's saying, that Bitcoin was at 6.6. Well, it wasn't. But the general gist of it, this is what went on. So just as I've shown you here with this pattern, this is exactly what was going on in Bitcoin. Euphoria, panic, oh crap, it's going to go up the floor, and then getting back in again, and then, oh, it's going to go to the moon, and then back down again, and then back down, and back down. So this has been a bumpy ride, but for those of us who caught it at the right place and got out at the right time, it has been spectacularly profitable. Now, unemployment is something that can give us a clue in terms of whether we are going to go into a recession. And unemployment has been high since COVID. Lots of people in the UK, they're not on the official register as unemployed because they're on the sick, saying that they've got mental health issues. Used to be a bad back was the easiest thing to fake. Now mental health is easy. They get paid a lot of money in the UK to sit on the bums in many cases. So there's no real incentive for them to go back to work. Similarly, in America, the figures, if you have 3 jobs, because you need 3 jobs to survive, that goes down as 3 different people. And again, the government massaged the figures. But if you keep your eye and start to pay attention to the news, are there clues of red flag news within Forex? And are there clues all related back to those three things again, growth, inflation, and interest rates? Are there clues that we might be heading for a recession? And in which case, what are we going to do? Well, if we go into recession, we want to be out of the stock market for starters. And hence, when I said to you the other week, Warren Buffett, one of the most famous investors of all time, is currently sat on almost $300 billion of cash. Why? Because he thinks there's a crash coming. So try to, and again, the famous quote about you buy when there's blood on the street. This is what your investing future is all about. And I know there's quite a few of you in here today who are with me on the journey in your investing future. And this is all about how we caught gold at the right time, how we made a lot of money from gold mining stocks. And again, I posted this from the copy from the meeting here in FMP the other week. And we have a section in here about survive and prosper in a recession. So one of the first things is, again, I've talked about, this is from last year, I've written this, all markets are cyclical, using currencies to hedge inflation. So you can use currencies to hedge it. And then I talked about gold, and this is going back, I can't remember when I wrote this article, 2 or 3 years ago, probably. But again, this is, it's been updated in February of this year. But this is going back years that I have been involved in gold on and off. I have periods of time when I don't touch it because it doesn't go anywhere. And I have other times when I do buy heavily because I believe fundamentally that it's going to go higher. So this is all explaining about when to buy, what to do, etc. And then stocks, again, trying to catch the stock cycles. Property. Now, property has been a brilliant investment for me over the last, well, I started buying houses when I was 19 and flipping them, which used to be a good tax figures years ago. I also built my own house 20 odd years ago, which again is tax-free in the UK, which is something to consider if you live in the UK. Having said all that, and I am just in the process of selling all properties in the UK. The previous government were making it less and less attractive to own property to rent out, tax-wise, and this new government are a bunch of morons and idiots, and it's just going to get worse and worse. So I kind of made my money out of property, and therefore for me, I am getting out now. If there is a crash in the future, then I might consider getting back in. And if actually I lived in the UK, I would still consider flipping properties, i.e. buying fixer-uppers to then move on and make a profit, because you can still make a good income doing that if you know what you're doing. So property was one of my best things, and this is about using other people's money. A good friend of mine helped me make a lot of money by buying properties on interest only. And the pleb in me, as he pointed out, he and I both came from poor working class areas in Leeds. Both of our fathers, where mine worked in a factory. I think Martin's was work for a funeral directors. So neither of us came from a moneyed background. We were brought up to pay mortgages off, and debt is bad. And yet, because of his creativity, how he'd explained it to me, I was able to make 2 or 3 times as much money by investing in a different way, by only borrowing money, interest only. Can explain that in more detail another day. And then alcohol, I've got whiskey in here. I do have some barrels of whiskey, and whiskey is a good hedge against inflation. It did particularly well during COVID. It's currently on a bit of a downturn. And another one that you can invest in the UK is wine. And the advantage of investing in whiskey in the barrel is that when you sell it, there is no capital gains tax. And the same with wine. So this is an article, and we'll post the links to this lot. One of the advantages, again, with wine is you don't pay capital gains tax in the UK. Now, it depends where in the world you are as to whether you would have that benefit. I know that in the US, you can buy bourbon in the barrel as well as, so you would have to get Googling if you're in the USA and see if the tax benefits are equally good. Now, this is a graph of wine investments since 2022. So you can see they are clearly well down. And this company, who are in the wine industry and therefore have a vested interest in suggesting it's going to go back up, are questioning whether we're now hitting the lows and maybe now is the time to get back in. My answer is I do not know. I have not investigated this market, and therefore I would need to understand it better. And ironically, because I live in Portugal now, which has so many tax benefits, it's untrue. Unfortunately, capital gains is not one of them. So I would have to pay 28% tax on this. So it becomes less attractive. The other thing is if you're investing in wine and or whiskey, it's a long-term thing. It's not something that you might need the cash in 6 months' time because you will take a hit. Whiskey, I bought whiskey through this company. This is the same company that owns Bullion Vault, from whom I buy gold. They're regulated in the UK by the FCA. The gold I buy via their partner company in the UK. It's stored in Switzerland, doesn't leave the vault, is audited, is allocated to me, and is insured. And our gold, because we caught it at the right time in the last 18 months, is up 28%, I think. And you can go 10 years and not make that sometimes with gold. Another one is art. And Ashley and I are working on this at the moment. Art is supposed to be a good investment in an economic downturn. Now, most of us in this room haven't got enough in our back pocket to go out and buy a Banksy or a Van Gogh. But there are opportunities, not necessarily with this company, but there are opportunities with companies where you can buy shares in paintings. So it's another thing to think about. They're talking here that the ROI of the past 10 years is 141%, which is not as good as the S&P, but it may be a time to consider something like that. So a lot of this is to do with just thinking differently and thinking, well, if everything turns to the nasty stuff, what is it that will hold value? And ultimately, gold is the thing. Classic cars tend to do well in a recession, but when the recession bottoms, and this photograph is from, I'm presuming, the crash in 1929. Yep. So this gentleman, if it's him, is trying to sell his car for cash because he's lost absolutely everything on the stock market. So the price would be through the floor. But there is a company in America, and I always get the name. I'm going to see if we can find it quickly. Here we go. This is rallyroad.com. I haven't looked at this or haven't been through it in any detail for a while, but you can buy shares in comics. And if you've ever watched pawnbrokers and these programs in the US showing you kinds of things that increase in value, then comics, as daft as it is one of them. But if you go onto classic cars and you have a look in here, you can buy shares in classic cars. Now, what I don't understand is this. I haven't looked at this until yesterday with a client. I hadn't looked at this for 6 months or more, and yet the same cars are showing here. So we need to do more due diligence. But basically what they do is they buy a car and they create a company for the car, and then they issue shares. So if you've always wanted to own a 1955 Porsche 356 Speedster, this car, you can buy shares at $212.50 per share, and they are saying that the car is worth $425,000. Well, they were saying that a year ago on here. So again, do your due diligence. But if you're passionate about cars, I was talking to Adam the other day. I don't know if he's with us today. Adam lives in Bali now. He and I are both a bit car nuts, and we were looking through here and said, oh, well, I've always wanted one of them. So it's just another interesting thing to consider. If everything turns to the messy stuff, then it could be that cars are a very good alternate investment. As ever, none of this is financial advice. I am not a licensed financial advisor in any country. And then property. So property goes through booms and slumps as everything else does. And this is UK market from 2000 to 2007. Now, I was fortunate. I bought some houses in August 2020 and 21. My wife and I bought 10. Using the other people's money idea. So we actually bought 10 for less than 100 grand. But the price of the property we bought in Leeds in the north of England, we paid generally about 30k, and they went up to 100 within 2 years. But we didn't sell because we were in for the rent for the long term. But certainly the growth that we got was much bigger than the growth is showing here. But then, of course, with property, there are regional differences. So, but it's one thing to have a look. And of course, in 2007, 2008, when the crash came along and the stock market dropped 60%, then house prices also tumbled because A, people may have needed to liquidate the asset to pay off other debts. And B, the banks were not lending money because of the crash because they didn't have any. So again, be looking out, if you're thinking of property, be looking out for clues that it's going to crash, and then make a plan in advance. And this is going back to 1990. And one of the things with property and why I was willing to borrow money interest-free was that, for example, the houses I bought at 30,000 20 years ago that I've just sold, I've sold for an average of 140. So I've made 120 grand profit, paid off the mortgage. And in the meantime, in the last 20 years, I've had well over 100 grand of income. And my total investment was 5,000 per house because I borrowed 95% mortgages interest only. So that is something to consider in detail. And the other thing when it comes to property, I just hinted about regional differences. So I Googled in here that within 15 miles of London, centre of London, looking for properties, here's a nice terrace house. This is in Upton Park, London, East 13. And this terrace house is 600,000. There is a boat here you can buy for 90,000. In the last few years, a lot of people have been buying boats on the canals because it was a cheaper way to live in London. But again, if you're thinking of doing it, the price has gone up significantly. And I read the other day that they're now making it so you can't have a permanent mooring. You have to keep moving around every couple of weeks. And the other thing to me has always freaked me is from a security point of view, don't appear to be the most secure thing when people can walk up and down this footpath and just jump on it. But needs must, that is an option. Buy yourself a boat, because at 90 grand, if it's anywhere near London that you could park it up, you would save a fortune. And then here, moving to a different area of London, a semi-detached house is selling for 625,000. It looks like a garden shed here for 200,000, and a not particularly salubrious looking flat for 225,000. This is a guide price from an auction. This will not go for 225,000. This will probably go for double. And similarly, again, in the UK now, a lot of properties are sold via auction because the auctioneers make a shed load more money. Now, if you are thinking of buying property in the UK and it's too expensive, then move outside of your area. This is an area where my wife and I were going to buy property until we decided now to stop. This is near Durham. Durham is a very pretty city in the north of England. It's surrounded by beautiful countryside. It's not far from the Dales of the Lake District, and it's very near to the coast. And you can buy yourself a modern 3-bedroomed house for £120,000. So if you say London's too expensive at 600,000, let's talk to Ashley about this the other week, think of moving. One of Ashley's friends has just bought a property for £250,000 where he lives, a terrace house like this, but it needs a lot of money spending on it. Well, a 250,000 mortgage plus 40,000 spend is a huge mortgage to take on for average income in the UK. The same person could have gone here and bought this for 120k, and it's all done, ready and done and dusted. So open your mind, especially if you're thinking of buying property as an investment. Did you want to say something, Ashley? No, I thought you were turned your mic on. If you are interested in property, this is a very good program. And the principle of what they do in this program is the same wherever you are in the world. This is all about buying properties at auction, and it is all about what to look for, how to make sure that you plan in advance the maximum you're going to get paid and you're not going to get carried away, how to read the legal pack, how to spot simple things like cracks in walls and clues that you need to investigate further. And I think there's 2,000 plus episodes, and I swear my wife has watched all of them. But it is a very good program if you're any interest in buying property to do up, and either to do it up for yourself to live in or to flip it. And some of the properties we have seen recently in Durham, this area, have gone for £70,000 and probably needed 15 to 20 spending on doing them up. So there are bargains around there if you look and you dig into it deeply. Another thing to think about is tax, and to be as smart as you can in terms of tax. So I showed you earlier, if you invest in whiskey and wine in the UK, you don't pay any tax on the profit. And as the profit would be taxed at least 25%, then clearly that is a significant benefit, rather than having 4% from the banks and getting taxed on that by the government. In the UK, on average, whiskey in the last 10 years has averaged around 10% return net, and that is tax-free. And then when we come out further onto the subject of tax, this is an ISA. In the UK, you're allowed to put 20,000 a year into a savings account, and you can trade shares in there, and you could simply park it in an interest-bearing account if you wish. But we've just done this for one of my daughters. If you're under 40, you can put £4,000 of the 20 into a savings account, and the government will add a 25% bonus. So you make 25% interest per year if you start below 40 up to when you're 50. And if you then do not touch it until you're 60, you withdraw it tax-free. So a 25% interest paid by the government from day one. If you're under 40 and you've got some spare cash, you need to be thinking about this. Right, so how do we, once we've decided that we know which sector we are going to look at, just as I showed you the wine graph a moment ago, then if you know what sector to be looking at, that's when we then move on to the technical skills to be looking for where to buy. And this is when we're looking at Forex or looking at anything else. And I have shown you this before. This is EXK. Silver, my silver is up 40% in the last 12 months. This is a silver miners stock. And some of the miners are still lagging, so they're still worth getting into. But this, since February, went up 225%. I have taken profit along the way here. I bought again. I'd taken profit again here. I took some more profit in here. And then I bought again the other week in here. And I bought again the other week in here as well as. So this is still, if you just sat on it, is still up 145%, whereas silver is only up 40%. One of the clues down here, this was more aggressive technically because the trend line hadn't broken. But this, one of the things I've done with all stocks, I have added the COVID lows. So when everything tanked in 2020 in March, and I have two lines in general, because like where it really consolidated and where was the ultimate spike. But as silver got down here, the price of silver itself was going up, and this was, to me, was cheap as chips. And because the all-time high on this, and even in April of 21, this was 430% higher than where it is now, then for me, that was a bargain. And I have done that, shown you before. I've got the same things on FANG stocks and everything else. Now, don't go wildly buying any of this lot, because some of these are things, just things I am looking at. Some I have bought. But this is a watch list. Now, this is Agnico Eagle Mines. And again, I have bought this here, here, here. I would not be buying it now. Yes, it could keep going up again, but the probability is against me. And the possible returns versus the risk are not worth it. And the other thing is I only buy stuff if I can make at least 25% to the recent high within a month or two. And that clearly does not tick the box. Whereas if we were to get back down here, and so then I need to start setting alarms back down here, then it would get interesting. So most of these now that I have bought previously, and again, these were trendline breaks, breaks of EMAs, trendline breaks, breaks of EMAs, pullbacks, etc., etc. This was a buy previously back here after a pullback. So all of these are already way up at the moment. Not to say that they're going to keep going, but we want to find a bargain. So we want to buy when they come back down again, is what you should be thinking about. I have a few big stocks in gold inside a frozen pension. I wouldn't buy the big stuff because the big stuff's way down, massive overheads, and they don't make the same exponential massive growth as the smaller ones. What I am buying at the moment is uranium again. Uranium, I did really well out. I shared this with you last year. This was up, this is one of my favorite ones. So that was up 150% in 7 months. And then it's been on a downturn. But uranium, there are more and more nuclear power stations being built around the world. There are sanctions on the Russians, who are one of the main producers at the moment as well as. So I think for the long term, this is going to be a good investment still to hold. So I have bought more the other week at 430. Other things we've done recently, well, if you're looking at gold and silver, at the moment, clearly, the price is at all-time highs. We don't want to be buying up here, but if I was thinking of trying to get into it now, I would start to think about it around here, around 2,475. Got 55 EMA, 50% bid in an uptrend. Stick a trend line on there. I think I have the trend line in there. Multiple reasons, exactly the same as for Forex. Actually says you are not a panelist. Let me just make a right, actually, you should now be a panelist. I'm just going to have a sip of my tea, guys. Just excuse me a second. Okay, so we had a look at cycles. We've had a look at technical analysis using and how to get there. Oh, this was one. This is one. I'm not interested in buying this again, but this was one I did say to my investing group the other week. I was a buyer at 306. This is a Bitcoin miner. The miners are struggling at the moment, but that went up. Oops, wrong indicator. Excuse me. 50% in 3 weeks, 2.5 weeks. So remember, I only buy if I think I'm going to be able to make at least 25% in a short period of time. So this is all M2, but this is fundamentals first, and then this is technicals second. So we had a look at that lot, right? On to Forex. So Bitcoin again the other week. If you look back in my blog, I bought Bitcoin down here around 53.5, I think it was. I said that my overall target was 59, just below the 200 EMA, and it got there. It did come up, and where did it stop? It stopped to the pip, to the point at 60,000. Huge psychological level. Looked like it broke the trend line, but it's not broke. Sorry, it looked through. It was going to break the 55 EMA. It did not. It didn't break the trend line. It dropped again yesterday. Now it's rebounding again today. But I explained again. I bought down here. I explained the thinking, I explained the target. Unfortunately, I took a chunk off. I can't remember if I took 50% or 70% off. I moved the stop in here, and this blooming spike took me out. So I didn't get the full benefit of the trade. Other than that, gold and silver I've just been showing you. So silver technically was at $49 an ounce 10 years ago. So technically this still has the ability to go up another 80%. From here, so 29.50, I would be interested. I have an order down here in case we get a crazy spike. And on the subject of crazy spikes, that's what we're talking about on Sunday in my analysis. When you've got something like this FOMC this week, it's going to be crazy in all probability. So the point is, you won't start placing. You wouldn't put an order in to buy here because it's just too near to where the current move is. And the average move is 80, and that would be 50. Here would be interesting, but if I was going to leave a forward ordering on silver, probably the first place I would be thinking would be here. And certainly I'm fine down here. If it goes crazy, gets down here, I'll definitely be buying down here. Dollar index, said the other week, we were trapped in between the 200 EMA and the 55 EMA. So when this came up to here, I was explaining that was a clue for me to start to think to short the dollar. The dollar Swissy was miles away, but the dollar CAD was one I had set a trap for, and the dollar CAD and the dollar index lined up at the same time, and the dollar index is more influenced by the euro than the CAD, but it came up, did this after news, and I was in almost to the pip. I had the entry there, the stop up here, multiple reasons again. However, this Sunday I said, I'm not going to touch it in here, because at the minute it can't make its mind up, and that's proved to be the case. The last 2 days we're going nowhere, and therefore that was a really good example of, well, okay, no idea what's happening, flip a coin, walk away. If it breaks and closes and goes on a run, I'll buy it. If it breaks and closes and goes on a drop, I'll sell it. At the minute, I have no idea. You could put a very small triangle on this, which will give you a clue about an explosive potential move, but I've no idea. It's too near current price, so I'm not going to put an order in here for FOMC because it's far too risky. However, the dollar Swissy is miles away. And you may say, well, he's mad, it'll never get there. And you're probably right, it probably won't get there. But then again, we have had instances over a 2-day period, that dropped the same amount. So here, I'm okay with leaving it in through FOMC. Here, I'm interested, but I'm not interested on a daily because I don't have enough reasons to support the theory. So now I would have to go down to the 4-hour and start to consider, well, is it worth it? Now, for me here, no, it broke here, consolidated there. There's loads of things in the way. Not for me. Move on to the next one, Euro USD. So the Euro USD, I showed you the other day, I had the order here. The 55's moved up a little bit, so I need to move that up as well as this one. If it keeps going from where it is now, a drop there would be 120 pips. So that would be twice the average range. So that might be interesting. However, I would be more confident to leave an order in if it was to come into here, because then we are going to be 160 pips, 3 days range, weekly 200 EMA, daily 55's just crossed it in a clear uptrend. If it's going to stop anywhere, that would be interesting. If the price starts where it is, if the price prior to FOMC starts anywhere lower in here, then I wouldn't touch it because it's too near to the price. And then the pound. So did this yesterday with a student. You could even take the pound at the moment as a buy off a weekly chart, because you've actually got 5 reasons here on the weekly to take this trade. So you've got the monthly 55 EMA, you've got the weekly trend line, you've got previous major support and resistance, you've got the 255 coming up behind it. And if this was to drop from here to there, is 400 pips, which is 5-6 days average range. So that you would be willing to leave in. Euro pound if it was to get up here. And then the AUD. So the last week I had a trade on the AUD after news. And so this again, this is the balance of the trade. I took the trade here. I think the stop was down here somewhere. And I showed you in an update during the week, I took off 70% of the profit here at more than 2-to-1. And I have left the balance of 0.3 of the trade to run. And that second part is now up 128 pips. The reason why I took it in the first place was after some news came out. I can't remember what it was now. I think it was something to do with inflation last week in the US. And suddenly the dollar gained strength. And this on a 1-hour chart dropped 37 pips. And then the second hour chart dropped 51, and the average is 55, and pierced through the 200 EMA, which is, I think, which one is it? It's not telling me which one. Oh, daily 200 EMA. So I got in here. And I got in here. I think the stop was down under the low and under the 200 EMA. Rode it up. Waited for the consolidation. Now it's moved up again. And now this is on a 1-hour. So on a 4-hour, I'm now thinking I need to move my stop again. So now from today, I'm going to move my stop under here, because here is where price has now consolidated again. And if it starts to make new highs and keeps going in my favor, I will be looking to move the stop to there. And if you go back to the daily, the risk reward on this was awesome, because A, we've got the 5 reasons. So we had the whole number for the stop. We've got the weekly 55 EMA. We've got the daily 200 EMA in an uptrend on a pullback, the daily range. And then we're risking 30 or 40. I can't remember what it was. And I was thinking the overall target is up here 5 or 6 times away from a risk reward point of view, because this is where it stopped in the past. So that I would be willing, if this comes down after FOMC to here, I would be willing to take that trade again, because it's more than twice the range. I think the Kiwi is more solid. Now, Ashley last week on my live account, I caught this trade, same as Ashley. Same thing again, it was news related. Yes, it was correlated, but it came in, it did 52 pips, the average was 55. It ticked all the boxes for multiple reasons. And if it was to drop from where it is now, it would be 80 pips. I'd start to get a bit wary with this. So for FOMC, I would go in here probably, or possibly even to the 200 EMA. Here is too close. And other than that, JPY is miles away. I only want to sell the JPY. Remember, a few months ago, I was saying when this got up here, the banks, central banks, are going to do everything and anything to try to get this to drop, because China didn't want the yen to get too weak, and Japan didn't want the yen to get too weak, and equally the US didn't want the yen to get too weak, because if the yen was getting too weak, Japanese investors would sell their treasury bills, which would reduce the price of the treasury bills, which would be bad because China still holds $1 trillion worth of them. So it was in nobody's interest to keep this up here. So the Japanese are screwed really in what they can do. Their current interest rate is 0.1% versus the US at 5.25. So nobody in the right money is going to put the money into a Japanese bond or bank, because it's paying you 500%, whatever the percentage is, more in the US. So the only other way that they can do it is to talk it down and jiggery-pokery with news and all the rest of it. But we're now down here. I only want to sell this from its current price is 200 pips away. Now, I have to be careful with this now, because the average range for the last 30 days is 180. So I'm not going to leave that in through the news either. What I would do with that one, I would wait until after the news comes out and then have a look. But I mean, here on a daily, I've not got 5 reasons. I've got one, I think. So let's see if we've got any more. Nah, bad example. Pound CAD. Pound CAD would be interesting down here, although I seem to think the stock might be big. Anyway, so the gist of it is, be thinking now about potential crashes financially and where you would want to put your money. And if you've always thought about buying a property and it's too expensive, then think of other areas. And what I've just shown you with the UK, with London and the north of England, it's the same anywhere in the world. The other things to think about is farmland is another thing. But again, most of us have not got the cash to go out and buy 100 acres, but you can buy farmland in what's called REITs. Having said that, there was one being promoted the other week by one of the big American news sheets saying, oh, you must buy this REIT. And then I was reading comments from farmers saying, you're crazy, we can't give it away at the minute. So do your own research. But all of it is planning and research. And it's exactly the same for Forex as it is for investing in anything. Plan, dig deep, look at the negative sides, what could go wrong before you make a decision. Right, somebody's saying, James, yes, you will be able to watch the recording. The recordings every week, every time. The recordings you will find along with the 3 most recent posts. You will find it in here later today. So all of the most recent posts are in here. And then in here, in the education area, you can go back and you can watch all previous ones going back years. And if you want to watch the ones like today, which are more to do, or the majority of it's to do with investing rather than just Forex, you can find my posts in here. Righty-ho. Ashley, are you there?
Yes, Mark.
Right. You are now a panelist. So
Okay,
what are you going to show us today?
So today I'm gonna show M2 charts, Earth and Sky, and then also how to trade this week in a way that you don't have a fixed bias about a particular pair. So whichever direction it breaks, I have a plan to basically trade the plan. So I'll just go over a few ideas, and there are some pairs slightly different entries to yours, but I'll explain why. So I'm just going to share my screen, but I can't because you're sharing it. Right. Right. Can everyone see my screen? Just give me a thumbs up.
I can.
Okay. Thank you. Yeah, so Euro USD, first one, I've got something similar to Mark's, just I've got it slightly higher. I was doing the same thing. I was calculating the distance, and this thing was too close to me. I think it was just twice the daily range. So I thought just to have it a little lower, because I have a few more confidences in here, 55 daily, 78.6 pip, and also this weekly trend line over there. And then have the same one as a pound New Zealand Yes, I do like the same area as well. So I might have to cancel one of them if they both start dropping. Um, and then dollar CAD. I felt like the dollar CAD is probably going to be very hard to trade this week, unless you're trying to get an intraday trade out of it. But that's because of how the news is planned out this week. Like today, you have the CAD CPI. Then tomorrow you have the FOMC, and then basically you have a little window in here, but then the market might not move until London Open. So you have until from here to here because you have the retail sales and also McW&x speaking on Friday. So for me, I find that pretty difficult unless it gives me some kind of confirmation on Wednesday, then I might get in on London Open and then catch it till the afternoon UK time before the news and get out. Um, but what's basically happening on the dollar CAD is it's in a little range here. So you could, draw a box around that over here. And basically what I want is a breakout either up or either down, but on a daily time frame. So on a daily time frame, this is what you want, breakout, pull back, and then it off it went. So over here, whichever direction it breaks, my stop loss is going to be around in here, 50 pips above that 200 daily moving average. And then my target is going to be back down here for about 130 pips over there. So very good risk reward 2.5. And then your longer target could be even 133 back down to where I believe the weekly monthly is in here. Yes, weekly 200 and monthly 55 is in here as well. So that could be a very good trade if it starts to drop, but very tricky. So I'm gonna mostly avoid the CAD pairs, CAD cross pairs and dollar CAD mostly this week. The other one that looks really attractive is the pound CAD. But I really want to get into this trade because it's broken a major area of previous resistance, which could be now support. And if you look at this, it's just technically it looks really good. But what makes it really tricky is that you have FOMC and then you have the pound rate statement the very next day, and then you literally have the CAD retail sales over here on Friday. So although I do want to trade it, I might just avoid it because of how the news schedule is out. So if it stays above this region here on a weekly, then that would be very good for next week as a trade. But I'll just put an alert in here at 178,700 just to keep an eye on it. But the potential on this is really good. You have 180 as the next region, which is about 150 pips. But if you look back, if it breaks out and pulls back in here, that could go even, I think it's a 500 pip move till here. Yeah, 500 pips. So about 3% gain on that. So that's what I'm focusing on that one. And dollar Swissy, I actually got a really good trade last week on my personal account. So I'm trying to grow the account from 300 to 1,000. So I'm just taking small trades. But the dollar Swissy is one I trade slightly differently, not exactly using the M2 EMAs, but I just trade it without any EMAs and then just basically support and resistance because I've realized trading this in the past few years, it just moves in levels everywhere if you pay close attention to it and backtest it. So over here, we had clearly the downtrend and it's been ranging here and it hasn't come to retest this level in the 85,500. So what I did is I had a trend line there and then I had this level of resistance. I went on the 4-hour and basically I took a short in here and that was last Thursday and then I just basically made around 50 pips out of it and just closed the trade because it was coming to Friday and then it's the end of the week. So I just didn't want it to retrace back all the way up and losing my gains. So I just took a small trade on there, but that has worked out perfectly and it's done about 112 pips so far. Now the plan for me with this one, it all depends on FOMC, but I'm open to both sides. So I'm open. I don't want to take the counter trend here. So I was just showing that to someone what he might want to do if he wants to take a counter trend. But ideally, what I want to do is if it does pull back up in here, that's about, I think, 100 pips, like I just said. So that would be twice the daily range. And when it's coming up to here, ideally, you want to see dollar index also come to 102. So that would be correlated because it's almost the same region. So I would definitely go for a short there. Equally, if it does break above on the daily time frame, let's say the dollar index breaks this level of resistance here and closes above here, then if I get the same move on the dollar, just dollar Swissy over here, I will look to take a long on the 4 hour the next day. So long here and then take it back up for 185 pips. I know everyone is thinking, the dollar is probably going to go down. I mean, yes, it's possible, but what if the dollar starts reversing and going back up if there is some kind of positive news? What if Powell says, okay, we are not going to cut rates that much. We're going to go like maybe gives clues that it's going to be less reductions of rate cuts this year. That could, boost the dollar as well. So we got to be prepared for both sides and just wait for the news and then take the action afterwards. And dollar yen has been one of the most tricky ones because of the stop. I had to literally go on the 1 hour time frame to find the setup, but 146 anywhere in here looks pretty interesting because if I pull this back, I can clearly see this is a level of support and now resistance. There's a trend line in there. There's a 200 moving average on the 4 hour, 78.6 fib. So I can basically, I have about 4 confluences there, 60, 70 pip stop there. But if you're looking to catch this, it's around currently about 500 pips away. So if it does a big move, like Marc was saying, you're looking at the big areas, big spots. So that could be a trade. 146 is a round number as well. So that's where I'll be looking to take the trade on that one. And what else have I got here? I've got Euro Pound. I know Marc was saying he's looking at 85,900, but I do find this place attractive at 85,200. I have a daily 200 there and a weekly 55. So I put an order in there, 30 pip stop, and I'm looking to make 112 pips out of that. Currently, it is 90 pips away, which is 3 times the daily range. So I thought that was a bit realistic to put it in there. And also, if you look back, that was the previous place where it made that low, and then there was also a gap in there. So I just feel like that could be a strong area for the price to react in there. And another one I'm keeping an eye on is Euro Aussie. It's a bit tricky, but I'll probably trade it after the news out on Thursday for the Aussie. But if I do get a breakout on the daily time frame above this level here, and if you look at the 4 hour, there's some EMAs in there. So if I get a breakout above here on the daily, I'll look to take it on the pullback and I put my stop here, 40 pips, to take it back up for about 100. So nice intraday setup there. Currently in between the EMAs, so not interested on that one. And Pound Swissy, I was interested, but not anymore. It just looks a bit too close to the entry. And then Pound New Zealand, I think I was looking at this because this is about 300 pips away almost. So if it does that on Thursday, that might be interesting to take a trade there, 75 pip stop to make 200 pips or even more, 400. So that might look attractive there as well. Right. Those are all the M2 setups that I have with a slight tweak. So I'll go on to Earth and Sky if no one has any questions. So Earth and Sky, again, this week we have correlated pairs. I removed Aussie CAD because I just didn't like the look of it on the M2. Although now it's clear the EMA, so that could be attractive. I'll just put it on later. EURCAD, we have the Earth and Sky zone at 150, nice round number. So you could look to long there with a 30, 40 pip stop, take it back up. Always look at these regions here, these R1s, so you can take your partial profit. They can be very useful and very handy because you can see there price has stopped in these areas before. So definitely 40 pip stop, and I'll probably look to take my profit here, 120 pips, if you were looking to take that trade. And then the pound CAD, like I was just saying on EM2, it looks very attractive. But because of the news, I might not trade it this week. 178.315, 50 pip stop, and 130 pip gain, or even more. You could start looking to take your profit at 180 as a round number. So that could be about 250 pips. But if you're going to choose one, probably the euro is a little better because you don't have any news as such for the euro after the FOMC. So that could be a bit tradable for 2 days and then get out by Friday. And then you had the Aussie CAD as well, which I thought it was a bit messy, so I didn't put it on. But quickly, if I go over that, for our time frame, your Earth and Sky zone would be starting from here to here, and then your zone is in here basically. So yes, that does look attractive. 40 pip stop. The only thing is now here you have that weekly resistance coming in at 35 pips. So you're risking basically 30 pips to make 30 pips. Probability is high here. As you can see, price has rejected this region. So maybe it might not be a good idea to take this one. EURCAD and pound CAD do look attractive, but again, keep an eye on that news for the CAD. Right, the yen pairs, you have about 4 in here. So again, you got to make up your mind about which one you want to take. And over here, we are in a clear downtrend. So for the zone, you're looking to sell anywhere around 141, 530. Again, the stops are very tricky on the yens, but order 70 pip stop there would be all right, but 200 pip gain, so not a bad idea. CAD yen, again, this one I'll probably avoid this week because of how the news is playing out, but 50 pip stop to make 170 there. Pound yen as well. This is back to back basically. Thursday you have the pound news, and then literally in like within less than a 24-hour period, you have the Japanese news coming out. Bank of Japan announcing their rate treatment. So I would probably avoid this one for this week. And then the euro yen looks a bit more tradable. 157, I would say. 80 pip stop to make 200. So all in all, they're all pretty much the same, but just segregate them according to the news and see which one you think could be possible to make a little profit from. But like I showed you on the dollar yen, I do like the dollar yen a lot, but only if it does pull back to 146. That's on the M2. And I would look to probably take this after FOMC if you're looking to trade the Earth and Sky strategy. So then you have at least 24 to 40 hours to get out of the trade and make some profit. Okay, that's me done. I'll be active in the forum and I'll share the trade ideas or whatever I'm taking during this week. But I'm a bit conservative, just like Mark. I'm going to focus on the big areas. I'm stepping back from the 4-hour this week and going mainly on the daily and weekly timeframes to catch the trades in the big areas. That's me done, and I'll hand over to Mark.
We're in danger. We're in danger of getting very good at this. You stopped exactly to the second or on the minute. So some weeks I only give him 10 minutes and he does it. Yeah. Well, I hope you all learned something from the session. It will be recorded and placed in the blog as usual. be very careful tomorrow, as we've explained, and think about setting traps now. And from the bigger picture point of view, the more you understand about what's going on in the world and how everything is rigged, and how the retail rookie is the one that gets sucked in right at the end when the news starts talking about, oh, gold's all-time highs or whatever, stocks all-time highs. That's when the retail rookie piles in, and he's the one that loses the money, while the smart money is waiting for the crash. But by having a plan in advance, and same with Forex, make the plan in advance, it takes the emotion out of it, and you can focus simply as an educational exercise. It is not that complicated if you have the courage of your convictions and you've planned it all and looked at all the angles before you trade. And that's